Okay, what's going on, y'all? Good morning. Happy Friday. We'll give it a few minutes for people to join, but hope everyone had a good week. Yesterday was a pretty nice trading day. We can go through some charts, have some ideas, then we'll go through some George after. And I just have this random playlist playing in the back. It's decent, it's good enough, whatever. All right, well, let's go address the elephant in the room. I think everyone's going to be out buying puts today, or at least they'll try to buy puts, and whether they get stopped out of them or not, I don't know. But the way that I see this is like this area is holding pretty well. You might get an undercut and then kind of just bid them up afterwards. But whenever I think about what market makers are doing, and this happens all the time, they always trap retail within the first like half hour, right? We've seen this time and time again. The only time we didn't see it is like, you can count them on your hand, right? Yesterday, same thing. They're like, oh, the market's going to crash, 9 a.m., 9:30. And then they did the bear trap. And then, right, 9:45 onwards, they just kind of ripped up, right? So I don't really have much reason to be bearish. I mean, this here is holding. I look at it on the 4 hour on SPX. And I've gone through this a couple times, but I want to teach you one thing about this 4 hour liquidity, right? This is a 4 hour fair value gap, right? So 4 hour bullish fair value gap. And all I did was just take the wick of this candle and the wick of the third candle, because it's always a 3 candle pattern. And from the top of this to the bottom of that, that's your bullish fair value gap, right? This is where buyers have stepped in, right? So yesterday, what did we see? We saw the exact thesis that I was sharing in the chat play out, right? I said, like, this area will hold, and lo and behold, it held. And what happened? We got a nice 4 hour pump up, right? And where did we reject here? It's on this bearish fair value gap, right? This is another 4 hour, but it's a bearish fair value gap. So, when you're stuck in this tight range here, it's getting tighter and tighter and tighter and tighter, tighter and tighter. It's eventually going to break out one way or another. Whether that's on the upside or downside, we don't know. But, we can take a gander and take a guess that there's a lot more buying pressure right now than there's selling pressure. That's my hypothesis. Now, I could be wrong. This might be like the top of the market at this point in time, and we're just going to crash next week. I don't know. But, when I think about a chart like this, I'm thinking about institution time, because fundamentally institutions set up their positions for about 4 hours. They take the whole day. Put yourself in the shoes of a market maker, right? I get to my desk at 8 a.m. I go for a coffee break. Check out retail at 9:30 to 10, maybe 10:30 occasionally. Then I go watch the news, go do some research, go do some analysis. Do that till 11:30, then go for lunch. Basically just piss off till 1 p.m. I come back, say, oh, cool. Retail is panicking because the market's either going up or down, and they bought puts or calls. And now we can go do the opposite at 1:30 when I'm back at my desk, right? And then by 2 p.m., I'm just like, doing other stuff, whether that's looking at charts or doing more research analysis. And then 3 to 3:30, I'm going to shake them out a little bit. And then the last hour is really for me to control as a market maker, right? So you got to put yourself in that position. Like, they work on a different timeline, I think, than the rest of retail. The rest of retail is looking at the 5-minute chart, 1-minute chart, being like, oh, I see a red candle, I should sell everything. I should see a green candle, I should buy everything, right? You got to put yourself in the shoes of a market maker saying, hey, if I'm going to get a discount by 50% of whatever the play is, then I'm going to add more to it, right? Like, I want to buy this. I want to get more of that if at all possible. But all I see here is we're back into this bullish fair value gap. And if it doesn't hold, sure, I'll get some puts. But the likelihood of this holding is pretty high, so I don't want to bet against that, right? That's where my mind goes. Like, I want to be as cognizant as possible towards the upside and understanding where the charts are and where the dealers are, because nothing about this chart is saying sell everything. Now, I could be wrong. Like, don't take it the wrong way. Like, I know I could be wrong, right? I only have an 88% win rate. But, I like the probabilities. I like the odds here for the upside better than I do the downside. And also, if I go time to the 15-minute tier, you'll kind of see what I see, hopefully, is this is a strong area of accumulation, right? It was here before, now it's up here. This is what got us that move up. Is this going to get us that move up even higher than before? Maybe, right? Maybe I could be wrong, but this looks like it's kind of go up, and maybe after they do a little shake and bake, and then kind of go up, start at that inverse head and shoulder, and then kind of fly up towards the upside, right? So I like the odds better of an upside move rather than the downside. And it's Friday, so don't oversize here. Friday's not the day you go and buy like 20, 50 contracts, because what could happen is we might just get stuck in this range all day, right? Until like 2 p.m., 3 p.m. rolls around, and finally it breaks out one way or another, right? So don't oversize here, because I don't think that's Friday's the right time to do it. But, you know, if I was a betting man, which I am, I like the upside a lot better than the downside. So that's what I see on SPY and SPX. QQQ, the exact same story is playing out, right? So I look at the 4-hour chart. I'm saying, hey, there's this, bullish fair value gap that you're coming back into. This doesn't look like a chart that is telling me to just go and sell everything. No, if anything, it's saying, hey, you're going to get a discount here. And maybe, just maybe, if we're lucky, this is going to complete this setting up higher highs and higher lows, right? You never go up in a straight line. Or maybe what could happen is a head and shoulder pattern. Maybe we get like one final hurrah, and then finally it starts rolling over next week, just in time for the SpaceX IPO, because SpaceX will be listed within QQQ, and that's going to take some liquidity out of the market to go buy the SpaceX stock, right? And that'll come from tech for the most part. So you'll see things like Micron, SanDisk, a lot of tech names like Microsoft, maybe even Apple and Nvidia sell off because of that, right? That could entirely happen. I don't know, but it's something to keep on your radar. So that's what I see. I see this area holding pretty well, and this is the same pattern that we saw last time. Oh no, the market's selling off. The exact same thing happened. You came into a bullish fair value gap, and then what? You ripped up once again. So I'd be very cautious not to. I'm not saying don't get puts. Like, you can 100% get them. I just don't see it. You might want to hedge yourself with some puts for next week, but I don't know. This doesn't look like it's gonna sell off that much, if anything at all. They might do a little undercut and then kind of go back up higher, right? So that's where my mind is. The other chart that I really like is Tesla. Tesla looks pretty good. I was saying this yesterday as well in the chat. Hey, like, this is a nice accumulation range every Friday or every day it's open. Like, you got to move up, right? This here is holding, did the undercut. This is also a cup and handle. Maybe just goes back up towards 431 today, right? No clue. But I like the odds of Tesla going up. Google, this is also a undercut and hold situation, right? Like, this looks like a pretty good pattern. Undercut here, hold it, and go up, right? And if you look at it on the daily, you did a nice shake and bake, nice undercut. Now you're coming into this daily displacement here, right? Right in the middle of that. What do we know about displacements? At least the way that I understand them. If you come back to the 50% and you hold above that, maybe do a little undercut, you are likely to go back up versus going down, right? So at least as it stands for today on Friday, June 5th, and happy Friday, everyone. Every chart here looks, I don't know, pretty bullish to me. I go look at NVIDIA. I see the exact same thing. Let me turn off my displacement indicator so there's less noise. You go to the daily. They did what? A nice undercut. And then what happens? Are you going to flip this displacement? Probably. Do I have evidence to believe that they're not going to flip this undercut? Let's go see. I go to the institutional volume alerts in George. And I've already seen this happen where they're buying NVIDIA, right? 3.9 million shares, 3.7 million shares, 15.7K shares. Now, does that mean market makers are buying NVIDIA or are they selling NVIDIA? Because the way that I read this, and I'm the one who built this in the first place, along with Easy and Timmy, this looks like they're buying NVIDIA, right? So do I want to go out and buy puts on NVIDIA knowing that they're buying, let's call it 7 million shares of NVIDIA? Probably not, right? That's just my thesis on this. I could be wrong, but do I want to bet against the market makers deploying? Let's do a calculation, right? 7 million shares. I can't even do math right now. Times, what's the price right now? 214.51. Someone's deployed $1.5 billion towards NVIDIA today. Do I want to bet against $1.5 billion deployed against NVIDIA? Probably not, unless I had $1.6 billion, then I would bet against them. But as it stands right now, I'm not close to that. So, that being said, does anyone disagree with the thesis that I have today? And it's okay if you do. That's totally fine. Like, I'm not knocking you to buy puts or bet against the people that are deploying $1.5 billion. That's totally up to you, right? I'm going to do what I do best, which is just wait for an opportunity and buy the dip, right? I've been very successful at that. So that's where my mind is. Apple looks pretty good as well. Sean's probably right. They're deploying a lot of capital towards 315, and Apple historically has been a flight to safety, right? Whenever things are getting bad, Apple holds up pretty well compared to the rest of the market. So maybe the same thing's happening now, right? Maybe this is a nice cup and handle forming. You have higher highs and higher lows, nice accumulation zone. And you're likely to go tag 317 today. That's really where my mind is. Like right in the middle of this range, 316, 317. And it's kind of the name of the game for Apple today. That's what I see. So we've gone through Tesla, we've gone through Google, we've gone through NVIDIA, we've gone through Apple, we've gone through SPY, SPX, and QQQ. I don't really have much reason to be bearish, but that's just me. I could be wrong. And if I'm wrong, I'll take it on the chin as I always do. Now let's go let's go through George first, and then we'll go through some dealer exposure afterwards. There's a lot of you that are new at George, and I'm going to use my local machine, but it's the exact same on the site. The georgefi.trade, that's where you can go find everything that I'm showing you on my local machine. Now, George is fundamentally the cumulative efforts of myself, Easy, and Timmy. And what we do is we look at hundreds of events, maybe thousands of events, and you'll see some events here that just tell us what's happening behind the scenes, right? So when he starts panicking, when I see these logs coming in, he's saying, hey, like I'm going to go and fetch all the prices. I'm going to go compute like what is going to happen most likely and where the dealers are positioned and where the layers of liquidity are. Liquidity could be a level, it could be a displacement, it could be anything above and more, right? But he's also watching things like the dollar index. He's watching the yen index. He's watching the volatility index across NASDAQ, the S&P, and for IWM and RUT. So what I do is I just wait for George to tell me what to get and when to get it, or use his confluence to better understand where the market makers are positioned and what volatility looks like, or what the US dollar is doing, or what the yen is doing. And that way I don't have to go and open 20 different charts here, right? I don't have to go and look at USD JPY constantly, right? What did I say this morning? Like, hey, you're rejecting here. This looks like a stop loss to go lower. Maybe I'm wrong, right? Maybe this becomes bullish and the yen starts breaking out and then we start selling off everywhere. Maybe, I don't know. He also looks at the US dollar index, right? If this is going up, you're getting out of equities and going to cash because you can get better yield, better stability on these other assets, right? And he's looking at the VIX. VIX probably is spiking right now, but I think it's going to come back down, right? So that's what George does. He looks at everything that we can't look at constantly because he's a bot. He's trained to do this. He's programmed to do this. And what he does is he tells us where there's liquidity, right? Where there's levels to watch, like you have equal lows and sell side liquidity at 753. Your range is between 753 to 760, and your call wall is here, your put wall is here, right? So I really like George. I mean, I built him with the Easy and Timmy here. But the thing that I really like is being able to look at where the money's flowing, right? There's a strong inflow in technology. If there's a strong inflow in technology and they're going to maybe bid up the market, do I have reason to be bearish? Probably not. Financial, I called this out like last week. Financials are getting bids. Look at that. They've now rotated into financials. Healthcare is slowly getting bids, right? Yeah, you have some inflows in energy, industrials, but you're moving out of materials, real estate, consumer staples, utilities, et cetera, right? So George has a pulse on the market that we can't always look at. Like you could do this yourself, but it'll take you hours, right? So we want to make this as easy as possible. Then I come to the analysis page and see, okay, what is he thinking about, right? He's thinking about SanDisk, he's thinking about calls, he's thinking about puts, whatever it might be, and he'll give us some trends, right? So structure's bearish on SNDK. You're in an order block that's bearish. You're swept the buy side, you're likely to go towards sell side now, right? So probably go lower on SanDisk and companies like Micron, but we'll see. Then you can look at all these other pages, but what I really want to cover here is the SPX page because that's what a lot of us trade. And so right now he's saying close calls consider puts. He might be right. The market might be selling off a little bit, but at some point in time it'll bottom out and we'll get some calls. And so what he also does better than I do is look at where the dealers are positioned, right? So you have a lot of downward exposure, a lot of downside exposure right now. 75.50, 35, 500, and 75, right? But slowly, just slowly, they're starting to build the upside position, right? And right now you're more put focused rather than call focused, but at some point in time that'll flip. We saw this yesterday as well, where it was really bearish in the morning, and then all of a sudden at 9:45, it was predominantly all calls. So what he does is in real time, he'll update the strikes that these dealers are building positions on, right? Now that's not data that we can see as retail traders, but it's data that George can see because we're paying for these subscriptions from indexes, from companies like Massive that give us the market data so we can figure out where the dealers are positioned. And then we layer in things like physics and genetics to give us an edge in this market, right? Because fundamentally, if everyone had the same data set, there's no edge. We really built the edge around physics for genetics with the inner circle theory, right? A lot of this stuff is, again, a cumulative effort from myself, Easy, and Timmy. Timmy did the physics and genetics part. Easy and I did the ICT part, right? And so really what we do is we try to figure out where the markets might move, right? How the dealers are positioned, how it's going to get accumulated. Yours might update in 5 minutes. Mine's a bit ahead, but I already know they're going to start building an upside position, right? So yes, it takes a while to update from my machine to the production database. Sometimes it's like 30 seconds. Sometimes it takes 2 minutes. Sometimes it takes 5 minutes. But rest assured, it'll update in real time when the market opens. Now you have a lot of bullish delivery. You have a change in the state of delivery. That's what SSD stands for. So again, your target is better on the risk and reward rather is better on the upside, right? Now you can go through all the layers of confluence, like you have cross-index intelligence, you have the strike ladder where people are touching, and where we're going to start, what the target is, and then where we're going to end up, right? Maybe we go down today. I don't know, right? But I think the risk and reward is better to just wait till the market bottoms out and then get some calls, because I have zero interest in chasing puts, right? I have zero interest in chasing puts when you're so close to a line of support here. When you're so close to a line of support here that's been defended, right? I don't like to do that. I don't want to chase because the only time I've lost money, to be honest, is when I've chased, right? So that's what, my mind goes towards. Now, this is a thing that I really like. This is strike ladder, right? Where the strikes with the most amount of exposure. And exposure works in a couple of different ways. One way it works is like it becomes support. The other way it works is it becomes resistance, right? So the target right now, 75.35, eventually this will flip and go towards the upside, because the way that I see this, and I'll draw this out for you so you can kind of see it the same way that I do, is I see a different scenario here forming, right? So let's go open this up and I'll show you how I think about these strikes and where this goes. Now, I think about this as, okay, if you're coming back down here, you're likely to go, and this becomes support now, to go higher, right? It's very rare that you just go through an entire level and then you slice through it like butter and you reject here, because fundamentally we're starting from up here, right? Where did we close yesterday, or where were we yesterday? Around 3,600. So we're going from here, you're coming back down here, you do the undercut and then start to go up. That's how I see this chart. That's how I see the strike ladder. Now, I could be wrong. It's very rare that I'm wrong, but it does happen, where maybe we open up around here and this becomes resistance now, and then we kind of bonk around a little bit before fundamentally going down lower, right? So that could also happen. Do I think that's going to happen? It's unlikely, right? But that's how I read this chart. I just look at all the strikes that are nearby to proximity for the spot price and try to understand where a level might become a support rather than resistance, or the other way around if we're on the upside, right? So eventually they'll start building a position upside, whether that happens today or Monday, I don't know. But, that is what's going to happen at some point in time. So that's how I think about this. He's also got key levels, order blocks, and timing of the thing, right? So right now he's saying calls are probably better risk and reward. And you know what? I agree with him. I think he's right. You also have bullish change in state of delivery. Dealer positioning is still building towards the upside, right? So I don't really have much reason to be bearish. I'm not saying don't get puts. You probably can make money on those puts. I'd rather just wait till it bottoms out and then get some calls. And if it doesn't bottom out and just goes, flying, like slicing through butter towards the downside, fine. So be it. I'll miss the play. I miss the play, whatever it is, right? So that's what we did for the SPX page, and worked the exact same page with RUT, with NDX. And he also has trade modules where he'll start to do some trades around like, hey, just wait for this setup to brew, and then I'll go and get some calls or puts or whatever it is. And he'll find some contracts that are pretty appealing, that are good risk and reward, that I think are more often than not really good to look at. So that's the SPX page in a nutshell, and works the same way, again, for NDX for RUT. And then what I really like to use is the Pulse page, just so I can better understand where the market sectors are, right? So right now, there's a lot of volume on Meta. I don't know why. Like Judy and I have been playing this, and it's working pretty well. You have some leadership in Broadcom. The leadership in Broadcom is actually a negative because they're selling the damn thing instead of buying it, right? RUT and IWM are moving better. We saw this yesterday when we were playing IWM and RUT is moving better than SPX, at least for the first hour. And commodities, for some reason, silver's catching bids. Let's go look at the silver chart. Let's go see what's happening there. So when the dollar gets weaker, silver catches bids. When the dollar gets stronger, the silver sells off. So right now we saw the DXY correlation. This is moving up, so silver's falling off. It probably makes a lot of sense to get some silver puts. Now again, I don't want to chase puts here. You're coming back to support from April 29th. Even before then, from the 2nd of April, I have very little interest in buying puts when it's sold off this much, right? Same thing on QQQ, same thing on SPY, same thing on SPX. I have very little interest in buying puts. I'm not saying it can't go lower, it probably can. But, my mind goes towards like your risk and reward is better on the upside. So we've gone through George. We now at least how the pulse page works. You can even go open up on these flows. This will get detected when the market opens. I think SPY might have some because it does extended hours. And, you can look at all the stuff and better understand where the dealers are positioned. I'm going to turn the volume off and just see where there's support and resistance, right? I want to make this as easy as possible. There's your priority low, price target 1, price target 2 for the downside and upside. So you can go look at these charts if you wanted to and just better understand where the market dynamics are, where the levels are, and see what might potentially happen. But again, I spend most of my time on the SPX page because that's primarily what I trade now. And I'm liking that they're slowly building the upside. But it is also Friday. It's going to be low volume. We'll probably get some shakeouts in the early morning. And then we'll see what that ends up. So that's George in a nutshell. Let me know if you have questions around this. We went over some ideas on 4-hour liquidity and how dealers work and the position there. Are there any other questions I can answer in the next 10 minutes before the market open? And I'll also open up the GPM chart that Sean asked for. What do you mean? Oh, just how far away it is in basis points towards the upside or downside, or where the spot price is, rather. So that's what that is. So GPM looks good. I was saying this yesterday. The 310, 350 strike for Friday probably looks pretty good. Or not even yesterday. I think I said this on Monday. So back on Monday, I said you're likely to go towards this high at the very least before deciding to go higher towards this resistance at 316. That's exactly where we are now. I don't want to chase calls on this. I have zero interest on chasing calls on this when it's run up this much, right? You had a nice accumulation zone, and now this is your channel. Maybe it dumps a little bit, and it probably goes towards 328. So I like the odds here, right? It's looking like it's higher highs and higher lows finally, right? After this accumulation fest from all of May. And then even before then, you had a lot of accumulation in February. But I don't want to chase it here. I really don't. I have zero interest in that. The nerve page is a work in progress. This is something that Schotter's been working on. He's one of the other members at George, one of the other admins. But this is all about fading the crowds, right? This is all about getting away from that retail mindset. Now, this is still a work in progress. We're training a model behind the scenes. That'll take some time to get to. It's about 30 days of data that we're going to collect before this is live. But, we are working on this. Relative lows and relative highs. I mean, I kind of do that the same way as I do every single time. Let's go look at the GPM chart, right? You have relatively equal lows here. So this is why that line exists. You have relative equal lows, relative equal lows, relative equal lows. Now, if I go long on this, right? If I go long on GPM, and let's say I came in on this candle right here before it started reversing up. If I'm a retail trader, or even if I'm an institution, I've set my stop loss somewhere within this zone, right? So relatively equal lows give you an idea for their sell side liquidity. So this is called sell side liquidity because they're forced to sell, right? This is where your stop losses are for everyone who went long on JPM at this relative equal low, right? And this relative equal low has been around for a while. That relative equal low was a relative equal high at some point in time. So that's where resistance was, right? And you kind of see the same scenario play out, but the opposite. So if I'm shorting or buying puts on JPM, and let's say I went short on this candle right here, or even the one up after that, this is called buy side liquidity, which is what's forcing me to buy this asset, right? And so this is where my stop losses are if I'm going short, and this is where my stop losses are if I'm going long, if that makes sense. Now that's how I use relative equal highs and relative equal lows, because it shows me with a lot of conviction where there are stop losses. And you can kind of see this really clearly on the NQ, maybe even the ES chart, right? Wherever there's relative equal highs and relative equal lows, that liquidity gets rated, and you come back to the opposite direction. Now you have relative equal lows here, that liquidity gets rated, and they stop at everyone who's trying to go long, and then kind of reverse course. So that's how I use it. You might use it differently, but this is how I trade, right? I look at where there's relative lows. I set up a position. I'm very, very cognizant that if I'm going long here, my stop loss is here. So I want to get right below that and put my stop loss below a displacement level, ideally, because that's when my risk and reward is the greatest, right? And same thing, if I'm shorting here, I would put my stop loss right above another displacement and get an entry right in the middle of that, because that's where my risk and reward is the greatest, right? Now, this is what market makers, this is how market makers work. This is how inner circle theory works, ICT for short. But that's how I use it. And it's been pretty profitable for me because I can just wait. I can be very patient and say, hey, if this comes back into this zone, the undercut, then it's likely to go higher if this displacement holds. I think we're going to see that today. I really do. So, that's where my mind is like, I'd rather just wait for one of these things to bottom out. I'll get some calls and then we'll kind of profit, right? Or even go long on futures or whatever it is. So hopefully that answers your question. But, I'm very pragmatic when it comes to my process, because the process that I built, I spent an entire year trying to figure out how to get it to work. And now it's in a good spot where it actually does work. And Georgia said there's some manipulation detected right now. They're buying SNDK puts, ARM puts, silver puts, or as said, soft selling off because dollars going up. Crowd puts, and at 9:30, this will get you the confirmation. So again, we built George because we can't look at 100 different charts at a given point in time, but he can. Eventually, this will say, "Hey, close puts and get calls," and I'll get calls, right? SYM. Let's go look at that. Symbiotic. Actually, this look pretty good. You're in this accumulation zone. Let's go draw a line right here, because this is your call entry. You might sell off a little bit more, just a little bit more to undercut whoever went long here. But I do think you're setting up for higher highs or a breakout towards the upside. So this looks good. You probably get to like 60 pretty easily, 56 pretty easily, because this is now a head and shoulder pattern that whoever went long or short here will be stopped out. And I think the draw for this is probably up here within that 60 area. So this looks pretty good for a breakout. Just give it some time. The move from here to here took about a month. The move from here to there might take another month. So that's where I look at. Meta, Judy's a better person to talk to about Meta. This looks like it's going to come back to 600 today. That's really where my mind is. If this area doesn't hold, you're likely to come back here. If it holds, you're probably going to do an undercut and kind of go back up towards 636. Oscar. I have leaps on this, so I can't really be bearish on this. Uptrend, undercut, uptrend. That's how I see it. And yes, we had made money on Oscar. Oh, UNH also looks good. I got some 400 calls for July, I believe it was. They're almost in the money. I don't know if anyone tailed me. I don't think anyone did. But they're up like 300%. So it is what it is. And I called that like weeks ago. I think I called it like back in like the middle of May. I was like, I'm going to get these 400 calls for June or July or whatever it was. Did I say Poopy? I meant Judy. For Meta. He's a better Meta trader than I am. Anyways, see, this is what I was saying. I have zero interest in being bearish here. Like, you're holding this level. You're holding this level. I'm actually going to go to the real SPX instead of this one. This is the one I use. I don't really have much reason to bearish. Maybe it doesn't hold, but I like the risk and reward on calls better, frankly, than anything else. All right, market opens in 2 minutes. Any last questions before we move on with our lives? I'll keep an eye on whatever George thinks about here, or if we see some suspicious strikes, whatever that might be. Let's open up Tesla. I don't think it's going to run as much as I expect it to, but the first 15 minutes on Tesla are always fake. They're always manipulation. Hopefully whatever I said in this chat makes sense. I know sometimes it feels like I'm going crazy here, but I've been right more than wrong. We've been right at George more than wrong. I'll invite Nick to speak if he wants, if he's looking at something on SPX. I don't know if Sky's here or Timmy are here or Easy's here. I don't see anyone. Wow, we have a lot of people in George now. Almost 500 folks. Crazy.
Oh,
what's up, Nick?
I was fine. I was actually just looking at that. I think when I was in here, it was like 290, 280.
Yeah.
It's like 2 months ago. What am I watching? I've got all the at the money puts open right now. Just looking at them. They're above the 200, but I like where like the 75, 40, 50 call and the 60 call are all kind of like hovering at the pre-market lows, and they're bidding it. So, I mean, like you said yesterday, the calls are. How many times have you been right? in the last 3 months on calls.
88.8%.
Yeah. Yeah. See?
All right. Let them sell it off a little bit. And then I know with very high confidence and probability they're going to start bidding up the market in like half an hour. Market
I think that
manipulation
4-hour
detected.
FEG was good to share, though. It was a really good thing for, I guess, overnight panic if anybody was tripping on it, and then kind of saw where they held it and then went straight back up. So it was nice.
Exactly. That 4-hour liquidity is amazing. Like I love using that.
Yeah, here comes this little flash dump on the at the money puts. What are the calls doing? Oh, immediately reverse. Look at that.
Yeah, they're gonna reverse the market on us. I already know. I'm gonna get the 754 calls in a bit here. I'm just gonna get like 5 of these. I don't want to oversize.
So if anybody's just going to watch like the at the money stuff, that's usually where I start making my play. I mean, fuck, I should have just bought these. These are $500 a thing. If you look at the 7540 calls, that huge candle right there, 1 minute in, it just made a push above the 21 and the 90 MA, and that's usually good for like for me continuation of volume upside. It should base for a second, undercut again, and then continue to go, which would keep us in that bullish thesis for the day. Only thing I would want to do is go to the opposite strike, the 7540 puts, and make sure that flushes under the 200. That's all I'm looking at.
Yeah, it's a good call. Again, zero reason to be bearish. Yes, the market makers will shake you out, but that's totally fine. Let's see to start building the upside. I want to show you guys George in real time because it's better this way. Oh, my server might have broke. Hold on. I have to restart this. Sometimes I run out of memory. See, like, you got that move up already. Like, we didn't shake them out yet. I'm going to wait till it shake out until 9:45 and then decide what to do. And by the way, there's plenty of day left. Like, you don't have to get rushed into a position right within the first half hour, even hour, sometimes even 2 hours, right? So you saw the premiums go up across the board on calls. This is what I was saying before. Like, not really much reason to be bearish. And here we are, like in the same exact spot we were been before.
I think that's kind of the hardest part too, is like a lot of the members might see us enter in the first 30 minutes when shit's expensive, and it might wipe out buying power for the rest of the day for some people. So it's hard to want to tail it, but there are plenty of good moves that happen in the afternoon.
Oh, yeah. See, they're already starting
I
to
guess
build the
it's a perfect
upside.
example of that.
Yeah. Yesterday was a great example for that. Like we had the best entry at like 11, I think it was.
I think I only had a few contracts in the 60s. I wasn't watching it, and then when I think you ended up alerting. Did you alert 80 calls or did you alert 70s? They were at like 330.
Yeah, it was like $330 at 11 or something.
So I bought 10 of those, not thinking anything of it. I went to go cut hair. I came back and it was up to like 9. I was like, oh shit, okay, cool. Well, there's like $6,000. Did it go to 17? Yeah, but like fuck it, whatever.
Yeah, exactly. Like you have plenty of the day to find other strikes you get that are much cheaper, frankly, than whatever the opening one is. But like, look, the thesis that I had is playing out, right? I said, don't be bearish. But here we are. They're bidding the market up slowly. Now, this might be a bull trap. I don't know. This could reverse in like 10 minutes, but that's what I was saying. Like, I like the odds better on the upside than the downside. I'm about to get some Tesla calls. I think Tesla calls will work. I'll wait the first 15 though. It does the bear trap usually and then reverses up. It's kind of the best one, retail panics. So I'm like, yeah, sell everything. Go for it. I'll just buy it on the cheap. Again, you got to think about it as a market maker. You got to think about like, hey, the thing that I want is on sale. Why would I not buy it? I like that Timmy's just taking the day off. I like that guy. You should also just take the day off. Honestly, it's fucking Friday.
One thing I'm not understanding yet is the August 21st Microsoft 500s. The OI is now at 60,000, and it was at 30,000 3 days ago.
I don't understand either. I think there's got to be an event or some news coming out soon.
Something, and like I'm down 40% on it, 50% on it, but
Same.
why the hell are they not getting out of it here and adding to it? It's 2 months left.
I mean, I'm going to add to it if it's a 40%
Right.
discount. Yeah. Yeah, Shay got retail. This happens every single day. Look how they're slowly accumulating on the upside, right? And there's not a lot of volume, so like I don't even think we should play SPX today, but if I see something, I'll post it. But they're building calls. Like look at that. 550, $6 billion, 540, $5 billion, right? I don't want to bet again. I really don't. As soon as these puts are out, which they will be soon, I'll hammer calls. Remember that Google thesis I had? Like if that area holds, which it did, get some calls, look where we are. Let's see what NVIDIA is doing. If this area holds and they're buying 17, whatever it was, like 7 million shares, you're going to get some calls. I just hope you don't get trapped into that retail mindset of like, oh, red candle, I should sell everything. No. The thing you want is on sale. Buy more of it. I know it's hard with limited buying power, but you know we've had a pretty good week at George. Like you should be pretty green on the week.
Bottom of your 4-hour bullish FEG. Where do you have that at? Like 75.21 or kind of right there?
Let's go look. We can strut out again. So it's between 75.27 to 75.60.
Okay, yeah, right on it. Yeah.
Yeah. So like, this is my ideal call entry. So I'm gonna just leave that up on the chart. Where are we bouncing from right now, right? This will do an undercut and then just kind of rip on the upside in like 10 minutes, 8 minutes, whatever. Just right in the bottom of that. Look at that. Close puts, consider calls. What the fuck did I say? At some point in time, this will just happen. I'll get some calls. Let's go, buddy. I set up a new account, like 5K or whatever. I already made $500 today, which is insane. I'm not expecting that. 75.50 at 710, or do I like the 75.60 at 450? I like that better. Look, they're still buying the 7600s. $11 billion on that. Do you all have $20 billion to bet against on the upside? If you do, please sell the fucking market so I can buy it cheaper. But this is all calls here. I really like the 50s. If I can get them at 7, I'm happy. Even the 60s at 4 is pretty good. Let's get 2 of these. And let's see if I can get them at 450. How about that? And what I'll do is I'll also get some Tesla calls, the 425s at 143. I'm just going to get 2 of these. What I'll also do is get some SPY calls because I'm here and we're chilling. Get 5 of these. Actually, I'm going to get closer to the money, half the money rather. Get 4 of these at 98, 97 maybe, 95. If I can get that filled. Boom. All right. Let these puts get out of the way and then I'll add to these calls. Sad Warren Buffett meme. There it is. I love this meme. Yeah, go do it. Go do it. Freak the fuck out and panic sell everything right now. It's over. Let me go buy it on the cheap. Look, these calls are starting to go green. Huh. Who would have known? Why are they buying the 40s and 50s? Weird. Yeah, nicely done, Oxy, on those gold puts. Again, market's only been open for 9 minutes. I know it feels like it's been open forever, but we got plenty of day left, all right? Just everyone chill out. What'd you do, Easy? I don't know if he wants to come up and speak. He's out in San Jose or something, so it's pretty early for him. I don't even see
Oh, he's
him.
in my hood.
Yeah, I think so, yeah. I didn't even see him on the chat. There's 100 people on the fucking stream? Oh, damn. We've hit the limit.
Yo,
What's up, Easy?
how about those puts though?
Well done.
Finally.
It's your once in a quarter win for puts.
Ooh, don't jinx it.
No, that's good. Right, we'll see what happens in 2 minutes.
Very healthy pullback.
Oh yeah, I'm not disagreeing with the pullback. I'm just saying, like, the risk and reward when you're down this much is better on the upside instead of chasing the downside.
Yeah, you don't want to short the hole for sure. I think we can get a 2% down now on Qs. Not that much more.
No, exactly. I do think Qs will sell off more next week because of the SpaceX IPO, but I could be wrong.
I feel like this is what this. It's like all coincidental. Yen's ripping or dumping, and they're selling tech for SpaceX.
Yeah.
You gotta watch treasuries. They're pressing in hikes now.
Yeah, and I've been watching the TLT. I mean, George also watching.
Yeah,
this.
also gotta watch shorter term, like the 1 and 2, because that's where we'll see the upcoming rate hikes getting priced in.
Oh, really?
Yeah.
US 2 year.
1 year and the 2 year treasury.
Holy shit. Two. Oh, man. Oh, dude, that's insane. That's a textbook breakout.
Yeah.
I gotta draw a line here because this is rejection. Triple top. They'll fall off a little bit. I'm not worried. I'm just watching for a better entry on calls. Just wait a little bit. $9.45 on the dot, huh? 9:45 on the dot every single day. Every single day. They shake out retail and then on the opposite direction. This area doesn't hold. I'll cut the calls. Then we'll get some puts. I think it holds though. Remember, there's plenty of day left, so we can always get more plays in afterwards. We don't have to get anything in the first half hour.
Just want to buy the at the monies again. The 20 calls. It's ramping.
They're buying the 20s? Yeah, I can see that.
Not a ton of volume, but it's slowly building.
At $1,400, I only see it's pretty good RR. Let's just see if this goes to 13.5, maybe. 13 flat. Let's see.
I keep dipping. What do they want to do? Scare everybody past that bullish FEG? Probably.
Well, the premiums
Make them
are
all freak
bidding,
out.
dude. The premiums are going up for these calls, man. I think it's about to rip up.
Only level under that I have is 74.97.
No, they're buying everything. They're buying everything.
Yeah. Oh yeah, there's $100 on those premiums. $200 immediately.
Yeah, immediately, right? They're buying everything. Okay. Let's go. 753, 5 contracts. If I get bagged, I get bagged. Fuck it.
Waterfield.
$753C, small size at 65 per con. 7530. 7530C at 1,000 per con, small size. Don't oversize this Friday. Yeah, we're gonna get George. Let's go see. They're building a lot. Dude, it's almost all calls except for one. Nicely done, Poopy, on IW inputs. Again, I don't want to bet against like, folks deploying this much capital towards the upside. Now, this could take days to play out. It could take 4 hours to play out. I don't know, right? It might just take a while. I like the risk and reward better on these. And in fact, you can also do like 1 day or 3 day calls, like 752s or 755s, and see where those end up. Oh no, I'm down $2 on these calls. Panic sell everything. Sell it all. Ideally, we see this flip where it just goes from 65 puts to 65 calls and 35 puts. But it's slowly building upside, so I like the RR better still. Oh, 100% master puts. I don't know if anyone tailed me on those, but they're up 100. There it is. Out all at 460 per con at everyone. 300%. Boom. Take the win. It's very rare that I make money on puts. It's very rare. It happens like once in a blue moon. Yeah, the Walmart 120s are in the money. I know. They're up like 100%. They went from $11 on Walmart calls to $60. That's a 600% return in 1.5 days. Yeah, one time we messed up Walmart really bad. I'll show you what the chat's saying. Yeah, those are the days. I mean, we were oversized on that one, but whatever. Okay, if we get no movement within the next 5 minutes, I'm going to cut the stream and we'll figure out what to do afterwards. But again, the series is holding pretty well. Google's about to rip up as well. NVIDIA probably starting to do that move up soon, if not already. Soon. Undercut, rip. Hell, NVIDIA calls here probably look pretty good. How much are they? Let's go see. What the fuck is this? No, NVIDIA. The 220s are pretty cheap. They're only 9 cents. The 215s are 85. Hell, a 270, 17.5 are 29. Get like 4 of these. See what happens. See you later, Oxy. Oxy's based out of somewhere in Australia or New Zealand, so it's very early or late for you. I can't remember. Take it easy, bro. All right, this is that shakeout. The 5-minute candle will push it up probably. And if it doesn't, it doesn't. But I like the odds better. Let's go see where they're slapping volume. It's still on the upside, weirdly. Interesting. What did they know that I don't? Hey, NVIDIA calls are up by 1%. 5%. Huh, not bad. SPY calls are up by 5%. Who would have thunk? I wouldn't be surprised if there's like a 10 a.m. Peace News or some shit. I would not be surprised at all. You don't slap this much volume on a fucking Friday for no reason.
I can't zoom in on my phone too much on your screen. What is a 75, 50, 10 bill? Yeah. Well, they just gotta let go of the top one, right? Yeah.
Yeah.
But I guess it's cumulative. It all kind of adds to be a little bit more on the upside.
We're up.
I like the whole quiet thing. It's kind of cool.
Yeah, when they quietly build, it takes them about, I've seen on average about an hour to build. But it can go as long as, especially if it's like a really high volume strike, like 20 billion bucks or whatever, that takes about 4 hours on average. I mean, we were up about 20% on these calls, but let's see where it goes. Okay, if we don't get any movement in 1 minute, I'll cut the stream and go make a coffee. This happens every single time. I go make a coffee and the market just rips up in the direction that I want. And I'm like, fuck, I couldn't even see it in action. Yeah, the 500 puts are getting out. You got it right. Hey, 10% NVIDIA calls. Not bad. Okay, you gotta, okay, one thing, let's go through this. I was saying this to someone else, I can't remember who. How do dealers work? When you buy a call or when you buy a put, you're buying it from a dealer, right? A dealer will deal you that contract. And so if I'm buying, let's say, the 7550 calls from dealers and I'm an institution or a retail investor, whatever it might be, they're hedging for the equal downside as well, right? So they'll sell me the call, but they'll buy the put, or they'll buy the call and sell the put, right? So that's how dealers work. They're constantly hedging. So if this number is going up, that means there's a bunch of people that are buying the fucking calls. So they're hedging with the puts. That doesn't mean the market's going to crash, just to be clear. That doesn't mean anything, at least for us. What that means is fundamentally they're just hedging towards the downside while they're selling the upside, right? So this is how the dealers are positioning themselves constantly. They're saying, hey, I'm going to sell the calls and buy the puts. Eventually they'll start selling the puts and buying the calls, right? Now, these are other institutions and market makers that are buying these call or puts, right? And so you're seeing how the put spread here, or the call spread here, is going towards the positive, right? This was 35 20 minutes ago. Now it's at 41. This will slowly increase because they'll start selling the puts eventually. And so now it went from what it was at like $11 billion 30 seconds ago to $5 billion, right? They've started selling the puts. That's how this works, just so you're aware. So it is what it is. Dealers are always doing that. Should we expect to see the put strike volume going down and then up if we want spot to go up? I don't know how to answer this. You want to see as many as much upside volume build versus the downside. That's fundamentally how you should think about this. All right, we're getting no movement here, so I'll cut the stream. I'll find something else later in the day. Right now, we're just stuck here, and this will probably reverse literally as soon as I close the stream. So I'll see y'all later. Peace.